think the most impressive thing today is the banks and the performance and reaction to the numbers. Citigroup right now is up 14%. Yes, this was the cheapest of the big banks coming in, but what do you think is behind this kind of very strong enthusiasm we're seeing now for the whole group?
Well, as you know, those stocks have been hit hard, and so people have gotten out of the way, and you get any good news, and these things pop. I hate to be a bearer of bad news, but I think this is typical of a bear market rally. What goes down the most often pops in a bear rally. I'm not convinced we've seen the bottom yet. We've had a bunch of mini bottoms, but I'm not sure we're there yet. But look, the banks have decent balance sheets. They didn't get into a lot of the trouble they did before the Great Recession. So any good news at these cheap prices gets them going.
Barb, are you a buyer on any of this news we've gotten? Interestingly, J.P. Morgan, which declined on its results yesterday, has come back today.
Well, I think going into the earnings, these stocks were looking very attractive. It really comes down to risk reward. And I think what you're seeing today is a big relief rally, not just in the banks, but it's the start of the 6-week earnings period. The banks are always looked at as a bellwether for what's going on in the economy. We get real-time information. And the news there was very good. Even Jamie Dimon, who, talks about the hurricane and really upped his loan reserves and looks down the road and says, hey, typically when you raise interest rates as aggressively as the Fed is doing, it doesn't mean good things down the road. However, things right now are very good. And I think if you look what happened in 2020, in terms of all the banks really upping the reserves in anticipation of who knows what would happen in the shutdown, and they didn't need them. And so I think that Jamie is just doing, good risk control here. And I think that investors are seeing that and going, wow, this is a good start to the earnings season, because everybody is worried. What are the earnings going to show? What is company guidance going to be? And this is a good start and very constructive for what may lie ahead this next few weeks in earnings reports.
So would you be buying the banks since they have been battered, Barb, even though we're seeing suspended buybacks? Citi did it again, and we're sort of teetering on the edge of this recession, even if we're not hearing that out of the companies.
Yeah, well, you've had big move today, like Citi up 14%. I think that when you see a rally like this, we've had so many false starts. It'd be hard to say, oh, let's go all in. But I would think that if they come off at all, you could be adding. And I would have been adding before this and would have had to live through the drawdowns yesterday. But I think you could start buying in here. Mm-hmm. I think again, the risk reward is extremely attractive. And I think a lot of the worst case, unless we went into a deep, deep recession, which just does not seem possible given full employment and the wage increases and lots of other positive things going on. So I think they were more than discounting bad news.
What about you? Are there any sectors of the market that you would tell people to buy right now on Barb's idea that risk reward looks very favorable, that these stocks a lot of stocks have gotten very cheap, and maybe we won't go into a very deep, ugly recession?
As Barb points out, the real question is earnings, and I think we're going to get mixed earnings given the slowdown in the economy. Look, I think we're in a period of time where it's not necessarily prudent to chase strength. I like buying on the big red days and I trim on the green days because I think we're going to have more volatility to the sidewise pattern before we make the final low, and hopefully that's soon.